And welcome to our training. I wanted to say thank you very much, Lizra and DAIC, for collaborating with CREAD to bring this free pack training to you. Also, I want to recognize Brent Barnett, who is our economic growth lead at CREAD, and also Karen Mehi, who is our communication specialist, for teaming up and having this presentation for you. I'm hoping that this presentation is going to bring value to you as entrepreneurs, business owners, in terms of enhancing your financial management capabilities and also adding value to your business as we move along. Let's try to make this, although we're not in a physical space together, but virtually we can still make it interactive and fun as we go through this together. This is our first training, and as we said, it's level 1 training. But before we go and delve into that training, I would just like to give an overview as we move to our next slide, Lizra. Okay, and this is the outline for the overall free level training that we have. Level 1 is what we're going to do today, which is basically dealing with startups, which is startup companies or probably companies that are very new and in the cottage stage. At that level, we'll be looking at starting a business. We'll be looking at the types of businesses that there are. We will also have a look at the local statutory and legal obligations as you begin your business and operate. We'll also be looking at the basic financial management with that. So these are the key areas that we'll be discussing today. In our next training, which is level 2, we'll be taking it a notch up and be looking more specifically at record keeping, looking at the importance, the value that record keeping adds to your business. We'll also be looking at basic records, and we'll be looking at the fundamentals of financial statements. And at level 3, we'll be looking deeper into your business and the accounting system that you have, or may not have, but might be considering choosing. So we'll be looking at tips for choosing and the things that you need to consider when choosing an accounting system. We'll also be giving some assistance in terms and advice in terms of how you set up probably the prerequisites that you would need when setting up these accounting systems. We'll also look at posting transactions. We'll look also at end of month and end of year adjustments, and finally financial reporting. So all of this packaged together helps to give businesses a better understanding. It is in no way a course that makes you an accountant overnight, but what it does, it gives you the fundamentals in financial management and helping you understand the terminologies in accounts, also helping you to understand the values and the purpose of certain accounts and records. A lot of times, many of the entrepreneurs in Dominica are not too interested or have enough time to spend on the accounting aspect, as their passion is more towards growing their business. It might be in terms of meeting customers and what have you. However, it is very important that as business owners that you have the fundamentals to understand. And of course, the deeper things can be left for your accountant. All right, so we're going to now go into level 1, and we're going to look at starting a business. And let's just look at the objectives though of the overall. So what we want to accomplish by providing this training is, 1, improving your financial management, as I said, helps with your strategic planning and with growing your business. You want to see that your business moves not just from cottage, but get it bigger into small to medium to even a large company, perhaps even regional and international. We will also, the objective is going to be to enhance your access to finance. A lot of businesses have hindrances when it comes to finance, and it's because of lack of proper record keeping and other reasons. So this objective is going to help to clear some of these barriers that might be an obstacle to you accessing finance. And the final objective is to make it more resilient in your business planning. So we'll look a little bit about, DAIC has a comprehensive training on business continuity. So you could touch base with Lisa on that. But we'd look more at making your business more resilient, not just with business continuity planning, but given the right accounting software that you choose, your style of management. So we are hoping that this training is going to help you to be more resilient and make your business as well more resilient. Next slide, please. All right, and here we are off to level 1. And our goal for today is going to be to have a fundamental knowledge for starting a business. We're going to have a broader awareness of our local business laws and regulations. So we'll talk about things like the statutory requirements as paying social security contributions, as inland revenue and paying our income taxes, registering our business, and probably also registering any logos or trademarks that we may have. We'll also want to achieve a basic knowledge of business finance, know some of the terminologies as it relates to debt, equity, and all of those types of financing, and also an understanding of the pros and cons of whether you should choose an in-house accountant or outsource your accounting and what works for you. So these are the 4 objectives that we're expecting to accomplish today. And I hope we're going to have fun in doing this. Okay. Now, the key areas that we're going to cover today, we're going to look first of all at starting a business. And then we'll be looking at the statutory and legal obligations. We'll look at some financial management basics. And finally, we'll look at our accounting approach, as we said, in-house or whether we outsource. So let's get started with starting a business. In starting a business, it begins with an idea. An idea can be triggered by several things. You could have an idea that is very imaginative, creative. It could be mixed of passion. It could be because of an experience that you had. It could be because of a need that you see. It could also be of a challenge. So let us consider the first one in terms of a need. Many persons set out to start a business. However, in starting a business, many come up with an idea, but a lot of times they do not identify what was the trigger of that idea. Some persons do, and where you have an idea that is as a result of a need, perhaps it could be that there is a particular service or product or solution that you wish that the local market had available, or it's lacking. And a lot of persons came up with ideas like that to start off the business. Perhaps probably you're in the textile industry and you're probably doing some fashion in terms of designing dresses. And probably one of your challenge or the need that's there is to get a wide selection of fabric. And it could be that this sparks an idea in you that, fabric quality and styles and textures are limited. And that could perhaps stimulate you to, let me get going with this idea and see if I can bring in my fabric. So this is just one example of the many examples all across the world of how businesses start with a need. But to make this a bit more interactive, if someone would like to, just by raising your hands, would like to contribute or let us know if you have a business or how your business started specifically with a need, share that with us. Or perhaps it is that you have not started your business yet, but you see a need or you identify a need and you think it's a good venture. If somebody would like to share that, that would be very helpful for the group. Would anybody like to share? Okay, someone has their hands up. I think it's Maxine and Esther. Okay, your mic is, you need to unmute your mic.
Thank you. Thank you. By the way, me, how I started my business, a lot of persons start to call me because they know I can do it repairing, that fixing washing machine, microwave, iron, blenders, fridge, those kind of things. And they start to calling me. So I started my business. Although, so I
Okay,
feel.
thank you. Okay, so thank you for sharing. And as we see that there was a need, you know, a lot of persons were reaching out to you because of the skill set that you have in repairing washing machines, and probably perhaps technicians for repairing washing machines are limited on island, and there is a need and an opportunity arise. How is the business going so far?
Again, so far I cannot complain because they all, as you do a good job and you know what you're doing, somebody, the customer like it and they want you to do work for them, you always get something to do. I am always get something to do also. I dare, and for now, a lot of person check me already to see what I go into for the day. For the day, I go outside and come back already because I have the tuning.
Great, thank you. Would anybody else want to share specifically to a need that spark your business?
Yes, Evelyn, would you like to go?
Okay, all right, so let's continue and feel free. As we said, we want to make this very interactive, and sharing your experiences can help others on the group as well. So moving on to experience, you might come across, and I would really like someone to, I'm hoping I'm going to get some volunteers here to share an experience that really get you to start a business, because you might go to a restaurant, for example, and your expectation of, you know, the food, probably the taste, probably the ambience is probably lacking. Your experience, or probably it could be going to any type of store, and the customer experience that you had was very terrible, and it probably sparked that idea in you to just go about and devote yourself into having a business that brings out a better experience. Would anybody want to share with us any real life scenarios that you might have as it relates to experiences, and if that was a factor in you having a business of your own?
Yes, let's raise a hand.
Hello, thank you for having this program, DAIC. So to answer kind of both questions, I've recently started a business to help companies get online. One, because of COVID and realizing that it's a struggle for a lot of the small businesses to have that online platform and accept payments and so forth online. But two, also because of the experiences I was having. So I'm trying to get in contact with a certain business. It's very difficult to find them online. I'm now living away from the Caribbean. So all those factors made me realize that this is very much a need, and it is related to the experience of the customer.
Thank you very much for sharing. So I could take it that, you know, probably a bit frustrated in your experience, and that triggered you to having a business. And that's what we can do. Sometimes the next big thing is staring us right in our faces in terms of, you know, the experience that you have. You see that it's lacking, you do something about it by creating that better experience to persons. It might be that there might be, maybe not saturated, but several small businesses offering a similar, operating a similar industry. But with your level of experience, if it is higher and it exceeds the customers, these customers are going to shift from those pre-existing businesses to your new business simply by the experience that you give to them. And a lot of businesses focus and invest heavily on customer experience. That is so vital. And I think that should be one of a very important component in every business, the experience in how persons either use your product, how they receive your services, how they appreciate your solutions. So it's vital that that experience for your customers are always high up the chart, exceeding the expectations. And what are some of the ways that you think that you can exceed or meet your customers' expectation?
Elijah, I would just like to make a special plug to encourage everyone who wants to make a statement to raise their hand. They would have to go to the participants section where you see participants. And at the bottom of that, it would have where you have raise hands or mute. So we would encourage you, if you want to make a point, you could raise your hand and the presenter Elijah would be able to recognize you and invite you to speak. Thank you so much.
Thank you, Lisa. All right, so as I was asking, what are some of the ways that you can gauge your customer's experience and measure it? Okay, well, you can measure your customer's experience in many ways. You could have that one-on-one talk with someone in terms of interaction whenever somebody comes to your establishment, to your business. You could have that one-on-one talk with them. You could also leave suggestion boxes. If you're doing, and as we see, COVID-19 has pushed us towards being more digital, you could use a lot of surveys, little small, maybe 5 or less questionnaires that you could push out to your customers to give feedback. Even if you are in the digital space, for example, immediately after you have transact with your customer, you could have a very small survey that they can take, something about a free questions just to rate your experience. And that helps you to measure how your businesses are doing, how you're performing, and whether you're meeting or exceeding your customers' expectation. For experience is vital. Thirdly, one of the business ideas trigger is having this inspiration, this imagination. A lot of persons set out thinking of what is the next best thing or the next big thing to happen. And as we can see, there are numerous inventions happening. There's so many patents being filed every day. Persons are trying to push the boundaries of technology and new solutions. So the mind is very, very, very imaginative. And so a lot of persons get very creative in what they can do. And never limit yourself to just probably imitating what you're seeing around you. Try to be different. Try to be authentic in your business ideas. Don't saturate the market with, putting another boss on the street or having another apartment rented, but really look at what there is the possibility of what lies ahead, especially in the digital space. There is so much potential that can happen, and the COVID has forced many organizations and businesses to see that there are no boundaries in terms of the digital platform. So it is very important to constantly push your mind and brainstorm for these ideas as what's the next best thing. You might have a pre-existing business, but just to make it different or even add value or expand the capacity of your business, having great ideas, being very innovative pays off. Some persons start their business as well with a passion. They have this desire, this gut feeling, this love for something. And that is a very good drive in starting a business because it makes it very personal for you, where you get to devote a lot of time. You do a lot of concentration in that area as to what it is that you want that business to be. And that is very good because having a passion helps you to weather the storm. As we know, starting a business is not something that yields returns overnight, but it's something that takes a lot of time. And so being driven by that passion is very good to keep that momentum going, to move your business forward. Some ideas can come from challenges as well. You might encounter difficulties with persons in terms of trying to move into a new space. Probably you're an expert at IT, and probably you want to shift and challenge yourself and go into a different field altogether. Some persons find success in that area. So these 5 areas really are triggers that helps getting that business idea. So starting your business definitely has to spark with that idea. Now let's look at what else are components of starting a business. So now that you have this brilliant idea, it is good that you identify the need. However, you need to do some research. As I'm not sure if it's Maxine shared with us, that there is the need of having calls from person constantly to repair the washing machines. This is a very good start. It sparks a bit of excitement. However, to go full-time into a business of repairing washing machines, we need to do more than just having the idea. We need to go beyond that. And that's where we look at transforming this idea now into how realistic this idea is. How fruitful is it? How long will it yield? Is it short-term? Is it long-term? Is there potential for growth? And these questions that you ask yourself can only be answered sufficiently by doing research. And market research is very, very important when you're starting a business. You need to gather data in order for you to analyze, to also interpret that information into things that are meaningful to you, to ensure that your business is viable. So no matter how great your business idea is, but definitely market research is going to help you to see how far this idea is going to be, how substantial this idea is going to yield in terms of returns for you when you invest in those ideas. And so having market research is very, very vital component. We're going to look at research broken down in 2 main areas. So if we move to our next phase. Okay, thank you. So when conducting market research, we first of all have what we call primary research. And that can be either by ourselves conducting the research. We can do that by interviewing persons, by issuing out questionnaires, issuing out surveys, having focus groups. All of these are ways that we can retrieve data. We can do our primary research by also hiring an expert to conduct that research for us. It all depends on our level of investment. If we're doing something at a very grassroots stage and we are limited on finance, it is all well and good to conduct your own research and do your primary research. If it is that your business is a little bit more advanced and you have funding or you have partnership to start that off, and you're going to have a very substantial amount of investment into the business, then it is best to have a professional carry out this primary research for you. No matter how it's done, the same key concepts and principles will apply. And you would use those various tools in order to gather the different types of researches that you have. So when we speak of primary research, it is more on the level of having those things, feedback coming straight from the participants that we are pulling the data from. We see there's a niche that we want to focus on, and we focus on this. Now, let us speak a little more in detail with the different types of ways that we can conduct our primary research. So with an interview, for example, we get the ability to speak face-to-face with people, interact with them. And one of the advantages of interviews is that it provides us with more detailed responses. with people. We can have now open-ended questions. We can get instant feedback and dialogue. We can probe deeper into the responses of persons. We are also able to see the facial expression as they answer certain questions for us, so that we can gauge whether these feedback are really genuine, really authentic. So these are some of the advantages of interviews. One of the downsides of the interview, however, it depends to how large your pool or base or population that you're trying to interview. If you're interviewing a very large base, it might take a considerable amount of time trying to meet persons on a one-on-one. However, for example, with a focus group where you would have a specific target persons. For example, you might have a business where you want to provide solutions for other small businesses. And in such an instance, it might be best to have a focus group where you have all these small business owners into one place, because you know they have this one common interest of the solution that you're about to provide. And using a focus group would be more effective than using an interview of meeting persons on a one-on-one. So it all depends to the nature of your business. It all depends to the nature and the content of the information that you're gathering. Questionnaires as well are very effective in that they are very structured questions. And once these questions are answered, it's very easy to now convert that data into information, plug it into your database, into your spreadsheet or what have you, and use that information in a very valuable manner. Surveys are very similar as well in terms of getting persons to give you feedback in information. Surveys, of course, are more specific to statistics and data. So using the survey, there might be, the way that you structure your questions might be a lot of yes, no's and ratings, so as to get the feedback on specific subjects. So using all of these components in your primary research is very important. Should you use only one? No, you could use all of what we mentioned here in doing your research. But as I said, it's very much based on your type of business, how much investment is going to be in your business, what the stakes, the risk ratio, and how much you need to. What is very important though is do not create your own primary research. And by this I mean, don't just because you're passionate about your business and you think it's going to do well, that you just interview your own self. You're going to be biased because you really want to push that idea. You really want to push that. You really want this business to thrive. That's why it's important to meet persons to get a realistic idea of, hey, how much are you willing to buy my product? How much is my product worth to you? Is it something that is a need? They give you a rating, and by that you would know, look, although 10 persons are calling me to repair the washing machine, but when I do conduct a survey on the island, well, the number of persons that really need me to repair for them is not going to pass 30. Then you're going to know, okay, I need to know at what scale should I have this business? Is it that at that scale, can I use 30 persons and repair their washing machines, and my business can thrive or grow? So these are the kind of information that you're going to receive to help you to ensure that when you make that financial investment, when you make that push into a business, how well it's going to grow. All right, so let's talk now about secondary research on our next slide. Okay, secondary research is basically information that has been there pre-existing. And normally agencies, government, and businesses have done the work already. Some of this information is free and you can find it on the government websites. And so most times they come in the form of reports or studies. And that helps to cut away from some of the information that you would want to get. However, in doing your business, I would advise that you use both the primary and secondary research. Having information from the government, from the agencies and business, we have to also be careful that when we capture this information, that we do so based on the market in which we're operating. For example, if you're operating in Dominica, although you can look on the global scale to see how well a particular industry or particular market you're interested in is doing, but if your primary customers are going to be in Dominica, be mindful that you should be relying more on the website and information from the local government and not globally. So that's something to consider. So in doing so, there are a lot of reports and studies that you could go through and you can get information from. For example, if you want to go into the business of having a hotel, for example, you could go onto the government website and see how the hotel industry is doing. You could see where these hotels are generally focused, what areas. You could look at probably a certain location that probably don't have that sort of service being offered. So all of that is very important. If you're looking at opening a grocery store, you would probably want to look at the population specific to villages or the area that you want to open this grocery store. You'd probably want to look at the average household incomes and the range of the household incomes when you're opening a business, because that helps you to know how much spending power that your potential customers are going to have. It's going to also help you to know how many potential customers are going to be here and how many of them you think, if you're using a factor or ratio of returning customers, your population is going to be very important when you make those sort of forecast and predictions. So secondary research is very, very important. I would also give caution that when you research, make sure that it's a credible website, make sure that it's reliable and not, a lot of persons share, and most times in good faith, they share a lot of information. They share their experiences on YouTube and what have you. But when you're doing research for your business, make sure that the source that you're researching is credible, it's reliable, it's authentic, because that is going to be your investment. Your investment is going to have a level of risk, and you want to ensure that when you make your research that it's reliable, it's going to help you to project as close a picture to a real life scenario as possible. Okay. Let me pause. I know I've been doing a bit of speaking, and I'm just going to pause if there are any questions, if there are any feedbacks, inputs that any persons or experiences people want to share, please take the opportunity to do so.
I think we saw from the messages too that Jody made a contribution when you're speaking of different ways that companies can interact with their customers to get information. She mentioned follow-up messages and also requesting feedback. So I think based on her business, presenting different products that help with hair and body and beauty, getting to follow up with customers and asking them for feedback is one of the ways that she understands what the customers want and how she can improve on her product and service to her customers. So thanks for sharing that through the message, Judy. There's also a raised hand with Evelyn. Yes, Evelyn, you could go ahead.
I don't know what's going on here. Are you hearing me?
Yes, we can.
Yes, we can.
Okay, good morning. I had been listening for the longest while, and as you were talking about the different ways that someone can start a business. For me, well, I've been in business for many, many years, but the new business that I just started, which is a fabric store located in Portsmouth, for us fabric and things, the idea came about sometime early last year when I went to a particular store in Roseau to get something. And while there, I saw a few ladies, around 4 or 5 ladies from Portsmouth at the same place trying to find fabric. So I'm saying that, but you all had to ask all your supervisors for time just to come and get some fabric, whatever. So right away, it just clicked to my mind. But Portsmouth is a very busy place. You have so many people. We serve the north and all the villages around. Why not do a fabric store? So it's very amazing sometimes as to how you get business idea. It's not something I really thought of before, but the fact that I was at that particular place at that time and met with the persons right away just clicked, and right away I started working on it, and here I am today, just over 4 months now. So Raz Fabric and Things is here as a result of this this experience.
Great, great, and thanks for sharing that.
You're most welcome.
Right, so that's very good feedback. That speaks to what we've been going through in terms of an experience. And there's so many triggers, as we said, that goes into a business idea. And I truly wish you success in your fabric.
Elijah, could I just make one more plug in here? And it's
sure.
For the Jody who mentioned, just want to mention it's Jody True, who is Jody Cakes and not Jody Hair. So I just wanted to make that correction.
Jody Cakes.
Yes, Jody Cakes.
Hi. Okay, hello, Jody Cakes. Okay, if there are there, Lisa, do we have any other comments or?
No, I haven't seen
feedbacks from the chat.
So yes, we could move on.
Okay, and feel free to interrupt if you see anybody raising their hands or any comments in the chats.
Yes.
So now we're going to move on to starting a business and looking at business plan. So we have already spoken about having the idea. We spoke about doing the research. Now with an idea and doing the research, we need to put things in motion, and that is where we're going to speak about the business plan. So if we move to the next slide. Right. So many persons, especially businesses, a lot of times you go to start a brand new business and you're going to a bank or one of the lending institutions. They are going to ask you for a business plan. And that is pretty standard as one of the prerequisites in having a loan for a startup, that you need to have a business plan. The reason for that is because you have not been existing before, the lenders want to know how well your business is going to be. Remember, they're investing monies into that, and they want to ensure that the business is viable. And the business plan is what helps to foretell what is expected. So we're going to look at the outline of the business plan. We're going to look at the main components of it. But it's I just want to stress that it's a very vital tool for any business owner. Whether you're starting up your business by financing it yourself and you're not sent for a business plan, I would advise that every business owner should have a business plan. Okay, and the best time to have your business plan is at startup, but it's not too late to have a business plan even if you are existing before, and I'll touch a little on that later. But let's look at the business plan outline. There is no fixed and hard rule as to how a business plan should be, but there are very key areas of a business plan that should be part of the business plan if you're doing one. First of all, you need to have an executive summary. That basically is an overview of the entire business plan. It's a synopsis of what's happening. It gives your investor information, the key information extracted from all sections of the business into one place. So imagine that you only had 5 minutes to sell your business to an investor. That's basically what the executive summary is. It's like a how they call it, a pitch. Okay, it's your pitch, and we can call it like an elevator pitch. You meet someone in an elevator, and that's the limited time that you have to pitch your business. So many persons, if you're going to an investor, whether it's a bank or some other investor, they're going to read your executive summary, and they're going to look at for certain things in terms of, okay, what is your business about? Or what is going to be a business structure? What is going to be the purpose, the nature of your business? What is the key focus of your business in terms of what market are you targeting? So the executive summary would also show things as the brief projections of your revenues, probably for the first 3 years, whether you'll be making any profits within those first 3 years. So the summary basically, as I said, gives an overview of what it entails in the business. If your business or your executive summary is well written and it really shows a lot of potential, then it invites the reader or the investor to delve deeper into more detail of the plan itself. Okay, so it's very, very important that you have a very well-written executive summary in your business plan. The other areas that are important to a business plan is a company overview, where it describes the type of business that you're in. Perhaps if it's a startup, when you're expecting to start up, if your business is already existing, you would have some information in terms of when the company started, how well it's doing, what has it accomplished so far, what has it set out to accomplish. You could, in that area, if it's a pre-existing business, you would have to share some information of past performances of your financial positions and your financial performance. Also, in the company overview, you would detail the products and services and solutions that you're offering or are seeking to offer. The market analysis is very important. As you can well remember, we just spoke about market research. And in that area, the investors are very, very focused. They want to see how much research you have put into this. They're looking to see, okay, what industry you're going to operate in. A lot of these investors look at that area because they do not want to plug more money into a saturated market. They also want to see what your competitors are like. Are there any competitors? How are you going to differentiate yourself from your competitors? Is it going to be by price? Is it going to be by experience? Is it going to be by quality? Is it going to be by innovative ideas? So they're very interested in these areas and how you do it. Your strategy and implementation speaks here about what is your marketing plan, more specifically to how is it that you're going to have an effective revenue? How is it that you're going to sell these products to your customers? How is it that you're going to entice them, lure them in? What sort of technology that you'll be using in your strategy? It also speaks about how far into the future that your strategies speak, okay? It's also under this section, key things such as the operations, details of how you're going to operate, your location, the facility, all of this information are normally part of this area. Another key area is management summary, and this speaks about the organizational structure. It speaks about leadership. It speaks about your team. For example, if it's a partnership, it would speak to the number of partners. It would speak to the qualifications, experiences of these partners. It would speak to what are they contributing towards this area. It will also speak about the team in terms of the different job descriptions, detail in terms of what each position will be responsible for. That's very important as well. And so this area is very vital, not just for the investor, but even you as a business owner, as you plan out your business. In your business plan, you might put out to have a very well structured, but it doesn't mean that everything has to be executed on day one of opening. It could be over a period of time. Many questions are asked, but the general rule in doing a business plan is, I would say, minimum 3 years projection and maximum 7 years. Okay, The further into the future you project is the more risky it is, because there are a lot of more uncertainties. It could be because of financial shocks. It could be because of also natural disasters. It could be political. It could be different interruptions, disruptions, and these things are difficult to predict. So the safe rule is always to use a business plan with a projection of about 3 to 7 years. Okay, I think the sweet spot would be there about 5 years in projection. Okay. Another area of importance is your service and products, the solutions that you're offering, how it is that these products are going to be. Are you going to manufacture them? Are you going to be a retailer? Are you going to be a distributor? What are the types of products that you're providing? What services are you offering? Are they unique? How are they different? How is it that customers are going to now shift their loyalty from, you know, these pre-existing businesses and come over to you? That's where you speak about your products and how they are differentiated, what value they're going to add to your customers, why your customers are going to be so interested in moving to your business and patronizing your business. The investors are very, very much interested in the financial plan. And that speaks about your financial statements. As I said, if you're doing a 5-year business plan and you're a startup company, then you're going to have 5 years of forecasted and projections in terms of your sales, in terms of your expenditures and what have you. So the financial plan is very, very important. It tells us to what you expect to generate in terms of revenue, how much you expect to spend in terms of expenditure, and what is the likely return, whether you're going to make a profit where you would actually sell more than you spend. And this is very, very important because it tells here of how you're going to pay back for your investment. So in the financial plan, there's a part of your financing. It speaks of how are you going to source that loan? Is it going to be totally from a bank? Is it going to be partly from a bank and from you? Is it going to be from you and your partners? And that's where the plan outlines how you're going to finance your business. Okay. So a business plan being a vital tool, it is also a very good tool, and I said I would speak about it a little later. It's not only for the use of access to finance. This is not only for accessing a loan, but a business plan is a vital tool for financial management. Although it is not the actual picture of what will happen, and because there is forecasting involved, there is an element of risk, yes. But when a business plan is made out, it is made out using historical trend, patterns that helps to project your financial status, that helps project your marketing strategy, that helps project your service and products into as realistic as possible. So when someone who is experienced in preparing a business plan for you would definitely have to use a lot of market research, would have to use all of these factors, would have to look at the similar industries, would have to look at what certain factors that the competitors are operating within when making this plan. Apart from accessing finance, the business plan is very important in terms of measuring your financial performance as a business and also your management skills. For example, your business plan might project that you would make $150,000 in revenue for your first year. This is going to help you. It's like a yardstick that helps you to remain focused on achieving these targets, if not exceeding these targets. And that's the value of the plan. It helps you to remain focused and targeted. A lot of times, small business owners go to the bank and they come to an accountant and they say, you know what, they tell me I have to get this business plan thing. I'm not sure what is the value of this, what's irrelevant. And then they take these plans to the businesses, to the bank, and they get the loan approved, and then they start the business and they never look at the plan ever again. And that is very poor practice as business owners. You must think of your business plan, and I'm not trying to offend anyone, but you must think of business plan as your business Bible. It's the Bible for your business. And so it is that guide that helps you with your business and what it is that you're going to do. These projections, they are achievable. However, they are achievable under the circumstances as stipulated in the business plan. So you must follow it, the guide and the cost. Of course, you should always seek to exceed the expectation of the plan, but the plan is there as your guide to show you how well you're doing. So as I cannot stress enough how important a business plan is done. I also want to touch that many persons try to avoid paying for a plan, and probably finance is limited, and they go online and they research to your plan. And I think it's good. It's a good idea to start your plan, develop something. But I believe it's more important to have somebody vet that plan, review that plan, edit that plan to you, go over it, get someone who's experienced to ensure that your plan is really substantial before you take it to an investor. Okay, there might be certain things you're missing. There might be certain projections that are way off, and the expert would be best in helping you to ensure that that plan is as realistic and feasible as possible. But definitely get that business plan. For those of you who have never done a business plan and you start your business well and you said, you know what, I'm doing good. I don't need a plan. My business is growing. I can understand that. But it's wise to have a plan regardless, because it helps measure, and you might be doing good, but with the plan, it could show you how much better you could have been. Okay, so it's very, very important to use that tool in your business. I'm going to pause here. If there are any questions concerning the business plan. Israel, do we have any comments or questions?
Yes, I see there are just a few persons may have to leave us at this time, but there are no questions pertaining to this specific one. So would be able to continue.
Great. Okay, so let's now move on to, we're still speaking about starting a business. Now that we have our business plan done, then we need to proceed to finding finance for the business. Okay, so we'll move to the next slide and we'll be looking at financing. Okay, so we have the idea all set out. We did the research, we have our business plan. Things are rolling well, but we need to finance our business. How can we finance our business? There are many ways of financing businesses, and we will just look from top down. First, it can be from our personal financing. You might have some money stashed aside that you could use to finance your business. It could be also from family members, and we would consider this sort of financing as personal financing. We have, which is most common, as debt financing, where you go to a bank or lending institution to seek for a loan or get an overdraft or a credit card or a line of credit to help finance your business. We also have equity, where we have investors. Persons might lend you monies or put monies into your business in exchange for shares. Or it could be a partner that wants to come in and put some capital into the business. So equity can be with your shareholders. You must know that with equity, you don't have to pay this back because that person is now part owner of the business. However, they are expecting returns. And so if you're doing equity financing, your shareholders are definitely going to expect some returns. So one of the things to be very mindful about is the agreement between you and your shareholders as to what the returns would be, when these returns would be paid. Also, what portion of your business are you opening out for investment? If you want to remain the main owner or primary owner of the business and you want to maintain ownership of the business, you remember you cannot sell more than 51% of your shares, okay? So you must have at least 51% of your shares to remain as owners. So that's just something so on in there. There are some persons that also do equity financing by partnership. It all depends on how the partner is going to be. Is that partner is going to be inactive as a silent partner, meaning that the person just inject capital and probably just represent in meetings or what have you. It depends to how involved that partner is going to be in the business. And if that person is going to be somebody that's going to be involved in the day-to-day operations of the business, you might consider also this partner receiving some form of salary or compensation. Also, in partnership, it is expected that the returns of the business are shared in proportion to, most times are shared in proportion to the capital contribution. For example, if the business is going to require $100,000 to start up, and there are two partners and they are both equally contributed to 50,000, then it is expected that the returns and the share and profits are going to be 50-50. Okay, so these are some of the things to be mindful in equity financing. We also have angel investors, and these are sometimes individuals that have reserves of cash lying aside for the purpose of investing in businesses for return. It could also be groups and organizations that are looking to invest in small businesses, of course, for a return. So these angel investors are also a good avenue. Locally, there might be angel investors. It's not something that is very common here, but it's worth exploring when you're looking for investors as possible persons. You might probably approach certain businesses that you might think that might be interested in your business or having a share of that. But just be mindful that when you open up to investors, of course, they are expecting returns or some form of compensation for the investment. Okay. We also have crowdfunding, where there are a lot of organizations that help with crowdfunding where persons participate. The advantage of crowdfunding is that you have a wide base of contributors to putting into those funds. So small businesses can thrive on these opportunities because most times their demand for capital is very small, and because you have so many persons contributing to this fund, then it makes it very accessible to small businesses. And finally, we have grants funded usually by the government agencies and donors, where they give you the monies, not in return as a loan, but there are expectations as well from the grants. For example, if the government is going to give you a grant, the government might be interested not in returns, but they might be interested in employment for their citizens. So they might give you a grant on the basis that you're going to employ 1 or 2 persons for a period of, say, 3 years, okay? Or a donor organization might invest in because of what their social responsibilities might be. And it might be that, okay, we are investing in your business, but we are holding you to ensuring that you probably have a cleanup campaign every month or whatever it is that their mission obligation is. So with investors, all investors are going to have a stake in your business. So you must ask yourself, okay, what is it? What am I willing to give up in exchange to get that business financed? Now, when financing your business, it's very, very important to know what type of investment you're looking at and how you're going about it. For example, if you're going to do debt financing, you must shop around, you must explore the different lenders in terms of the interest rates that they're offering, in terms of the down payments, in terms of what happens, is there debt forbearance? What happens, am I getting a grace period? Is some startup companies or lenders might allow startup companies to have 6 months, or some might expect you to pay right away. So you have to be mindful as to the agreement that is between you and those investors, and how is it going to be on your business. Always look for an investment that has the less risk, that has the less cost to you, and that has the less of you giving up ownership of your business. Okay, you could also have a combination of any of these financing sources that we speak about here. Okay, but these are the most common types of funding that are available for businesses as they start up.
Yes, Elijah, we have a comment. Can persons do partnerships in the form of cooperatives where members contribute shares?
Yes, that's possible.
Definitely.
And partnerships, and we'll talk about, I think we have types of businesses coming about, so I'll probably stress on that when we get to that point.
We move on.
Okay, if we have no more comments, we can move on to the next slide.
Okay, sure.
Okay, so this is a final section in starting a business. And here we are speaking about the different types of businesses that exist. A very common type of business that exists in Dominica with our small businesses, sole proprietorship. And what we want to do here is really understand the different types of businesses and what it means to you in terms of the risk and the liability. So as a sole proprietor, the business is fully owned by one individual, and there is no legal separation from the business. What we mean by that is you and that business are one. So for example, if the business is owing suppliers and you are delinquent on payment, then, and if it has to reach to a legal settlement, then you're going to be held liable as an individual. And although we know businesses are separate entities, but there must be the right type of formation of a business for that to exist. So under a sole proprietorship, any legal implications of that business is directly linked to you as the owner, okay? So you'll be accountable, and so you will enjoy the profits, but you will also be responsible for any debt or risk that are part of the business. One of the advantages of this type of business is that it's easy to set up, it's less costly to set up, and you have full ownership of the business. But you run at the risk. As you say, the ratio is the higher the risk, the greater the rewards. And so you're at a higher risk here legally as a sole proprietorship. But of course, if your business is doing well, then you get high returns, and all the returns belong to you as that owner. Okay. We also have partnership where two or more persons come together to form a business. And as a sole proprietorship, there is no legal separation. So if you're doing a business and let us say you're delinquent and your business has gone bankrupt and it's owing, it's in excess of what it has as assets, and it has more liabilities, say of $200,000, and there are two partners, depending on the ratio of shared capital would depend on how much debt each partner is responsible for. So there's no legal separation as it is with sole proprietorship as well. But however, the profits, the debt, and all of that are similar to the sole proprietorship. The difference here is that there are more than one owner of the business. In corporations, the business there is an organization separate from its owners. So it's as a legal entity, it functions as a legal entity. In this regard, you would have the investors are liable only for the stake that they have in the business. So if the business has debts, it's going bankrupt, it's been liquidated, the investors would only be losing what they have invested in the business, okay? But these types of businesses are a bit more costly to set up. It's more expensive in terms of paying the fees and what have you. But these are for structured business. Now, does it mean that as a small business you cannot set up a corporation? No, you can. And it all depends to you and how much you feel comfortable being exposed to risk or the legal implications of your business. But this type of business exists. We have limited liability companies, which is basically it's almost like a hybrid of a cooperation and a partnership, where there is legal separation from the business. There is no personal liability except for what the partners have injected into the business. But there's some advantages in terms of the way that you're taxed for that business. Okay, and we have cooperatives, which is basically a group of individuals and persons that come together to form a business. Normally these persons are referred to as members. And we have some cooperatives in Dominica as well. So these are the types of businesses that exist. In starting your business, you could think ahead as to how your business is going to be structured. Where do you want to see your business? You could start as a sole proprietorship, and there can be a change. You could change the business structure of your business at any time. Okay, so if your business is expanding, it's really growing, and you want to open it up for investment, you can transform your business from a sole proprietorship into a corporation, where you have investors, where you have shares, and your business become open to or expanding capability because of your investments that are injected into the business. You could also have a limited liability company with that hybrid, as I said, with corporations and sole proprietorship mix, where your business is now public trading business, and there you get access to a lot of business wanting to buy into your shares, and the business grows on. So you could start up as a sole proprietorship, as I said, and you could change the structure of your business as it grows. I'm going to pause for any comments.
There are no comments thus far. So we want to keep encouraging all the attendees to, you can type your questions if you have any questions that you want to be addressed as the presentation is going on. Thank you. Okay, so we have just concluded the 4 points and 4 areas, and we have just concluded our first area. This is the longest area, so we're not going to take as long with the other areas. But I just want to recap on what we have touched on. First of all, we said in starting a business that there must be an idea, and there are different things that trigger that idea in terms of whether it's a need, an experience, whether it's an imagination, whether it's a challenge. So this is what it takes in terms of it starts with a spark, that idea for your business. Also, you need, from having that idea, you need to do some research in developing that idea, transforming that idea, harnessing that idea into something that is more structured, more realistic. And that's where we spoke about market research. We spoke about primary and secondary research. We look at the different ways that we can capture that research. We also look at having a business plan, which is a very formal, well-structured written document that gives light to the executive summary of the business plan, what gives you a broad view of what it entails, and then the other areas as it relates to the company structure, it relates to the products, it relates to market research, it relates to strategy and implementation. We also look at how we are going to finance our business. What type of financing we're using. Are we using one? Are we using a combination of whether it's personal, whether it's debt, whether it's equity, whether it's angel, whether it's group finance, crowd financing, whichever type of financing that we want to use. There is also the business type that we just spoke about. Consider what type of structure that you want your business to be set up with. If the idea is not yours only, but
two of you have this idea and two of you want to push through, then it's wise to start up with a partnership. So we have just looked at starting out the business and looking at the key things that are required in starting the business. Now we're going to move to section 2, and there we're going to look a little bit about statutory and legal obligations. Okay, we'll begin first with inland revenue. With inland revenue, they are very much interested in how you start your business. And before you begin your business, it is wise to visit the inland revenue. Right now, you can access the inland revenue online. I'm not sure. There was a hyperlink on the slide. I'm not sure if it's still there, but you could always reach out to us and we can always share this hyperlink with you. But the inland revenue, and we can share the website with you definitely of how it entails. But there's a very well-written document. It's a 13-pager on the inland revenue site that helps you to understand how to start the business. And we have captured some of the key areas here in our slide. So first of all, your business should be registered. A lot of persons operate informal businesses, and some persons with the intention not wanting to pay taxes, or just totally ignoring the fact that they should register their business. But it's important to register your business, as when you go to a bank, for example, they're always asking you whether your business is registered. If you want investors to be part of your business, if you're looking for financing for your business, persons want to ensure that your business is registered, that something really exists. It's also wise in registering your business so that you can have an account, a bank account in the name of the business. Checks can be written to that business. Monies can be deposited to that business specifically. So it's important to have your registration. With the inland revenue, you're required to fill out the form, putting in details such as the name of the business, type of the business, the owners, etc. Once you have filled that out, you will be processed and you will be added and considered registered on the database of inland revenue. And you will also receive a certificate of registration, okay, where the business is registered. One of the things that's important in registering is that inland revenue also is that once you're registering the business and you tell them the type of business that you're interested in, as we spoke about the different business structures, they would help you determine what class of tax that business will be falling under. So that's very important as well, rather than having a business and then you get pulled up by inland revenue and you're not even aware of what the tax implications are. So it's wise that you have your business registered and you visit the inland revenue. They will give you free advice and also give you proper guidance as to as you go through the different types and what the tax implications can be. All right, certain businesses in Dominica as well, according to inland revenue, are required to pay licenses. For example, some of the common ones we know is that if you're operating a store or parlor, there are store and parlor licenses that you're required to pay. As a huckster, there are licenses as well. If you are selling liquor, then you must have a liquor license. So all of these are very important. Don't just start off the business and disregard the obligations that are required. There are different types of taxes, as I said, and it depends on the structure of your business. Some businesses, depending on your annual revenue, inland revenue would require that you register once your business is generating $250,000, $250,000 or more. You are required to register for that. So you could always reach out to them for more details on that, but that's where it starts. So if your company is generating less than that, then of course you will not be required to register for that. Okay. There is the PAYE, which is the pay as you earn, and any person who is making more than $30,000 a year is required to pay tax. So for example, we spoke about the sole proprietorship. If as a sole proprietor, your business is making money, you and the business are considered the same. And therefore, if you have not registered your business, you're not keeping proper records, and Inland Revenue requires you to pay taxes, it's going to be very difficult for you. You might find yourself in a very vulnerable position if you do not have all of these things set up. Whereas if as a sole proprietorship, you are registered and you are keeping records, it means that all legitimate expenses for the business will be charged against any revenues that is generated for the business before you are taxed. Which means, for example, that if your business generated, say, $50,000 for the year in revenue, and you have expenditures that can offset that $50,000, giving you a return of, say, $20,000 profit, it would mean that you are not required to pay any personal taxes because the PAY taxes are at $30,000 and up. So in that case, it's at an advantage to you in ensuring that you're registered, that you're filing your taxes. If you do not have records, it might be very difficult for you, as I said, in terms of how Inland Revenue is going to view that. How is it that you're going to prove to them that you have been operating below the threshold of $30,000? And so that's why it's very important that you are registered and that your businesses are keeping the proper records. To be aware of as well, there might be withholding taxes of payments to non-residents. So if someone is working for you, or it is that you are probably even renting property from somebody who is a non-resident, probably they have purchased property here in Dominica and they're renting out to you. As a business owner, you are required by Inland Revenue to withhold 15% of that revenue for Inland Revenue. So it's very important that you know of these things. And of course, more to get into the intricate details of that, you would have to visit the Inland Revenue, but I think it's worth sharing in our training that you're aware of these legal obligations as you start your business. Okay, and incomes that are greater than 30,000 per year, there's different thresholds. For example, if your revenue is, your income as an individual is beyond 30,000, you're expected to pay taxes, but there are different thresholds at which you pay those tax. So I believe after 30,000, the next 20,000 that you make beyond that would be taxed at 15%. And the next 30 after that is taxed at 25%. And anything greater than that is taxed at 35%. If you're a sole proprietor, also one of the advantages is that if you have a mortgage, for example, there is also mortgage allowance that you can receive, and other allowances that you might be previewed to that you can have applied against your taxes. Inland Revenue also requires you to keep proper, complete records of all business transactions, and I spoke about that earlier. And failure to comply to this regulation could allow Inland Revenue to now predict what it is that you made. Although you might not have made that actual amount, but guess what? If probably you were not keeping proper records and your last 3 months in the year were showing that you were making well over 10,000 a month, they could use that and prorate what you made for the entire year, and you might find yourself being required to pay taxes. So keeping proper records is very, very important. And I cannot stress that more. It also is very important, not just for tax purposes, it is also important for you as a business owner. But in respect to Inland Revenue, it is mandatory that as a business owner that you keep proper records. You also need to keep also supporting documents. By that we mean invoices, bills, receipts that you have gotten from your suppliers, receipts issued out to your customers. All of these should be well kept, well documented, and kept together. Inland Revenue expects you to keep these records for at least 7 years, okay? So keep these records somewhere very safe. And so that in the event that you are audited or visited by the Inland Revenue, that your records are well presented and there you would not be taxed beyond what you're supposed to. They also expect you to generate financial statements at the end of the year. You're expected to prepare financial statements. At that point, many business owners would reach out to an accountant to have the financial statements done for them. However, I just want to piggyback on our previous point of record keeping. I'm asking the accountant to do your financial statements with a proper record keeping is really something that is difficult. And in so doing, your financial statements will be prepared by the accountant, but in the notes of the accountant is going to note that your records were incomplete. And there it leaves room now that for probably Inland Revenue shedding more scrutiny on your business. Okay, so ensure that your record keeping is done properly, as it also impacts your financial statements that you're required to generate and present to Inland Revenue every end of your financial year. And you are required to file your tax returns, regardless of whether you have made sufficient revenue to pay taxes. If you have made losses or you have made profits, you are required to fill in your tax returns. So some persons think they should only file tax returns when they actually have tax to pay. That is incorrect. When you have losses, you should also file your tax return, because the good thing about that is when you have losses, these losses get ruled, Inland Revenue allow these losses to be rolled over until you make a profit, at which point the losses will be offset against these profits. Okay, so it's important. You might make losses, you might make zero. Always file your taxes, and your tax should be filed with the accompaniment of a financial statement. Okay, so Inland Revenue requires these things of you, and I just want you to be mindful of it. You might be operating for years, not filing any taxes, but you are required by law to do so. So if you're not yet registered or you have not yet visited the Inland Revenue, please do so, and they can provide you with more information on that. Just going to pause for the Inland Revenue section, just in case there are any questions or observations there.
Elijah, we just have two questions from the previous slide.
Okay.
When Walsh asked, does the limited liability company still pay annual returns? And what are the advantages of an LLC over an LTD here in Dominica? So first,
okay,
does a limited liability company still pay annual returns?
Yes. Yes, all companies would have to pay their annual returns. All companies are expected to. There are different thresholds for the profits that they make, but they're expected to.
Okay, great. And then what are the advantages of an LLC over an LTD here in Dominica?
Okay, that's a good question. To be honest, I do not have the exact difference of these two. What I can say, they're pretty similar, if not the same, according to the laws of Dominica. I know internationally, the advantages is based on how the partners in the limited liability companies can file the taxes. For example, where a business generates profits, at the end, the shareholders, the owners, can either declare it personally for their personal declarations and taxes, and they get taxed at a different percentage as opposed to the business. So it gives them an advantage as to how they can file their taxes. I'm not sure if it's so complex with Dominica laws. So that's maybe something that has to be visited with Inland Revenue to see if there are allowances for that. But pretty much that is the general idea of the difference between the two, is how the owners can file taxes at the end, what the taxes implies for them.
Okay. And the cooperatives mentioned that cooperatives do not pay taxes to Inland Revenue Division and so do not file income tax or pay VAT.
Say again?
The person who's representing us cooperatives here on the meeting stated that they do not pay taxes to the Inland Revenue Division and so do not file income tax or pay VAT.
Or pay VAT, okay.
Yeah.
Well, that's an advantage to them as a cooperative.
Yes.
So it all depends to what the business you're going in. There are different advantages for different companies, as I said. And that is why it's very good to consult the Inland Revenue to know what advantages lie for the different types of businesses.
Sure. Great.
Okay,
Well,
any other questions?
to the next one. There are no more questions right now, so perhaps you
Okay.
can next.
Okay, so let's speak about Social Security now. Social Security is very important to all of us as workers, as employees, as employers. Of course, we are required. It's not an option. We must contribute to Social Security. And let's look at the different persons. There are three types of contributors. There's the employers, there are the employees, and there's the self-employed. With the employer, here are the requirements that some of the employer must do is that they must register with DSS, which is Dominican Social Security, within 7 days of first employment, which means from the time that you start your business, from hiring your first employee, within that week, you must register with Dominican Social Security, okay? You also must ensure that all employees are registered. So you have hired someone, you must ensure that that person has a Social Security card. And if that person says, well, I've never paid Social Security, I'm not registered, you must ask them to register. I know some informal businesses practice not paying Social Security to the employees, but that's against the law. And therefore, if you have employees, you definitely have to have them registered. And I would say there's a distinction between an employee and a contractor. If you have contracted someone to work for you, it must be that they are contracted the contract will be reviewed to see how much control you have over that person, okay? So probably if somebody's doing something for your business on a contract basis for a limited amount of time, then that person will not constitute as your employee. But if it's someone that is your employee, they must be registered with Social Security. So that is the onus is on you as a business owner, as an employer, to ensure that you have all your employees registered. The rate of contribution right now is 7% for employer, I believe. And this rate is subject to change. It changes through time. We will share the website with you for Social Security so that you can go through it. For the purpose of time, we'll not be able to navigate through that. But we would share these websites with you that you could go through and contact Social Security. But employers are expected to pay 7% contribution and 7.25%, whether if it's with redundancy or if it's without. All contributions must be remitted by the employer, which means that the employer must provide that 7% contribution, and the contribution of the employee must be withheld from the employee's pay, okay? So if you're paying your employee, you must withhold their portion of contribution from their pay once you and be remitted so that you could pay it. And the deadline for payment of contribution must be on or before the 14th of the month, okay? So that's the time that you're required. With the employees, all employees must be of the age of 16 years or older, and they must be registered within 4 days of employment. So once they're employed, they must be registered within 4 days of employment. They must be of the age of 16 and up, and the rate of contribution is 6%. As I said, this is subject to change. It keeps changing every year, I think until somewhere in 2030, where the total contribution will be at about 13.5% or thereabout. Okay, but for the details of the contribution and the changes, you can find it on the website of Social Security. And we also have the self-employed persons who are able to make payments, and similarly to the employees, they must be of the age of 16 or older. And their contribution towards Social Security should be about 12.5% of their total income for the previous year, and it's at a maximum of 84,000. And they are, you can pay monthly, but Social Security has a payment plan where you could pay every quarter. And so every quarter you pay a portion of that contribution. Why is it important for contributions? So that during, we would look at some of the benefits, but it covers you during very vulnerable times. And we will speak a little more about that as on our next slide. But I just want us to remember, late fees can be applied to you if you do not meet the deadlines of the 14th for the employer and for every quarter for the self-employed. Okay, all right, so some of the benefits of Social Security and doing your contributions is that there is also the short-term benefits, which, and when we say short-term, we're speaking about a maximum of 26 weeks or 6 months, and that covers sick benefit. So the sickness benefit is a very good benefit, not just for the employee, but for the employer. Imagine that you have to pay your employee a full salary for 6 months while they're sick. You would have to have someone to substitute for that person, which means you might be paying a double salary for 6 months for the same output. And this is where Social Security benefits, and ensuring that your employees are registered with Social Security, then Social Security is going to pay a maximum of 60% of the person's average income, okay? And so that helps you now by saving you 60% of paying that portion of salary whilst your employee is sick. And that covers sickness benefits. We have maternity benefits. There's also maternity grants, which not to the employer, but to the employee specifically, in terms of on confinement, that each child would be paid a one-time amount of $500, okay? However, during the processing of sick benefits, all sick benefits must be proven by providing a certificate of sick, a certificate of your sick period, and that must be by a qualified practitioner, doctor, or whoever it is that is qualified to certify your sick leave. All right, so bear in mind that these benefits are there, and it helps to reduce the cost of payroll for you as an employer when your employees are sick. So ensure that they are registered, ensure that their contributions are being remitted to Social Security. There's also benefits under the employment injury. So, and that is specifically due to occupational hazard. So that person must be injured on the job while performing their duties and tasks. And if that is done, God forbid that one of your employee is injured during that time, then Social Security would cover benefits such as employment injury benefits, disablement benefits, any grants, also medical expenses relating to that specific injury on the job, and also death benefits. For the long-term benefits, which surpasses 6 months or 26 weeks, would cover things as age benefits, age grants, and other such benefits as retirements and all of that. So to get a full detail of these benefits and how they apply, as I said, you could visit the website of Social Security. Very important to have all your employees registered, and more importantly, that their contributions are paid. There are certain companies that have not been remitting these contributions. They withhold the contributions from the employees, but they do not pay to Social Security, or perhaps they do not pay on time. And what can happen is when that employee is sick and they bring in the requirements and they are unable to get paid from Social Security, it is perhaps because of the delinquence of the employer. So as an employer, remember your responsibilities to ensure that your employees are well taken care of in the event that any of them fall sick and they are able to enjoy those benefits. Any questions, Lizra?
No questions yet, just a question on if we would share the slides, and yes, we will definitely after this. So all the registered participants, so if anyone did not register, we'd still want your email address so we could send the slides to you.
Okay. All right, so we're going to move now to our next slide, and we're going to look at our third area, which is the basics of financial management. Okay, and that's, as I said, just a fundamental understanding of financial management. And when we speak about financial management, we speak about how well we are managing our cash, how well we are balancing our cash in terms of our day-to-day operations, in terms of how we achieve our business objectives, how we finance our business towards our business strategies. And there are three pivotal areas that we consider when we consider financial management, and that is investment, financing, and returns. As we spoke about earlier, about investment, we must look at where our source of fund come from, and we spoke about different forms of financing. And so in our investment, we must understand, okay, what is it that I'm going to invest? How long do I expect? What's the duration of time for that investment? And so there are what we call short-term investments and long-term investments. In financing an investment of a short-term nature, we are speaking about things such as our current assets. We're talking about things as deposits. We're talking about inventory. These are very short-term investments. So if we are selling or providing our services or products on credit, we might also have a receivables account. This is a list of persons who are owing us, and all that would be considered short-term assets, current assets. Long-term, we would speak about things like purchasing fixed assets, purchasing a facility, purchasing land, purchasing a motor vehicle, or purchasing an equipment. These are things of a long-term nature. It takes a longer time for these things to generate a return for us. So we must now consider the right approach in investment. So if it is that we're going to buy some inventory, we expect that inventory to turn around within a quick time. And so it would be of an advantage if we finance our inventory by a short-term type of investment rather than a long-term one. Simply because it's going to be cheaper for us to pay off that short-term debt as opposed to taking a long-term. So the general rule in financial management is to finance your short-term investments through short-term financing. So as I use the example of an inventory, it would be best to get probably an overdraft facility to finance your inventory. So if you have an overdraft facility of, say, a maximum of 20,000 and you need inventory of 15,000, you could easily use that overdraft facility, purchase the inventory, and because your inventory is expected to turn around quickly, then you'd be able to sell this inventory, and from the returns of the inventory, pay back that short-term liability, which is your overdraft, okay? As opposed to taking a long-term payments. And that is how in financial management, it helps you to balance properly by looking at the cost and looking at the risk elements. Of course, if you're considering purchasing a motor vehicle or a property of a longer nature, these long-term assets take longer to generate returns. They also last longer. These are things that are going to convert into profits for you, but it's going to take much longer to do so. And so when it comes to financing, it is best to use long-term liabilities to finance these investments, okay? And with financing, we look at ways to finance. We can look at our internal cash, and that can either be cash that we have in probably short-term or long-term deposits. It could be that it's cash we have in returns, return earnings, it's profits that we're making that we continue to keep in the business. We could also look at working capital. And when we speak about working capital here, we speak about areas where probably we can use our creditors and the credit facility from our suppliers to finance operations. For example, the scenario we used with the inventory, for example. With inventory, we could purchase inventory from a supplier who's probably giving us 60 days credit to repay. Knowing well that our inventory sells out within 21 days. So we could purchase on credit for 60 days where we would not use any cash of our own, and purchase that inventory, which we know that will turn around within 21 days, well before the time that it is due for payment. And that's an effective way of using working capital to finance your inventory, for example. Okay, we also spoke about debt, which is loans and all of these establishments in financing. This is where we match, as I previously said, this is where we match our debt to the investment as to how long it's going to take, what is the interest rate on this debt, what is the risk on this debt, okay? We spoke about equity, angel investors. We use that as well on financing. We use that also to finance our business. And in doing so on financial management, it's basically, think of it as a scale where you or somebody juggling three things, where you juggle between investment, you juggle between financing, you juggle between returns. So you think that this business has a good opportunity and you want to invest in it. You must now think about, okay, how is this going to be financed? We think now in financial management, we think about risk versus rewards. We think about the lowest cost possible in financing or investments. So sometimes, as I said, the longer the debt is, the greater the risk, and therefore it's going to be the greater the reward, but also the returns might be greater. So when we speak about returns here, we're going to look at, depending on our business, if we have shareholders, we're going to have to pay them returns, which is normally known as dividends. They're going to want to expect some form of dividend payment for the investment. No one is going to invest in a business not expecting returns. You as a business owner, you are expecting returns, and therefore your investors, your shareholders are also expecting dividends. But we must, in financial management, we must balance how much can the business afford to pay its investors. We must keep our investors happy by giving them a portion of returns, but we must also be mindful as to how much we can pay to remain competitive, to remain operating beyond a year. Okay, so that's very, very important when we speak about financial management. It's juggling between these three components and trying to strike a balance. We might be expected to share profits if it is with partnership. We must know if the partners make profits, do we pull all the profits out of the business? Then how is the business going to continue to operate? So that's one of the things to consider. You might have to consider paying bonuses maybe to your staff, maybe paying bonuses to your management team based on the agreement in the compensation package. All of that has to be considered during financial management. And retained earnings is measuring how much of the profits that we have generated that we're going to keep putting back, because that is a way of as we speak about internal cash that we can use to continue to invest in the business. So financial management is very, very important. And we have a next slide that gives us a little more detail, if we can go to it. And here we're talking about financial performance ratios and measurements. There are two things that I want to focus here. One is working capital, as we mentioned earlier. And here, just to be a little more detailed, the working capital days really measures how long it takes for a company to collect cash from its operations. For example, you are selling tires. You purchase those tires. And if you purchase those tires, well, it's going to go through a process. You purchase the tires, you're going to use something to purchase the tires. You might use cash, or you might use your advantage of your creditors. Your creditors might give you your tires for 30 days or 60 days, whatever the credit terms might be. Or you might use your line of credit, your overdraft facility. But once you purchase that tire and it sits into your storeroom on the shelf waiting for someone to buy, that's what we call inventory days. How long does that product stays on the shelf before it gets into the hands of the customer? And then once we sell to the customer, assuming that we sell to the customer on credit, how long does that customer takes to pay us back? That is regarded as trade receivable days. And then how long do we take now to repay our supplier who sold the tires to us in credit? So if you add up your inventory days and your receivable days, and you minus that from your trade payable days, that gives you what you call your working capital days. That gives you the true amount of days it takes for that tire to convert into cash flow. That is a very, very important measurement in financial management. It's a very, very important way to measure. What it measures your cash flow. It measures how quickly that your product turns into cash. The whole process your working capital turns into cash. And that is critical, because if you are able to know your working capital days, that helps you to make informed decisions, know when to reorder, know if you're lagging. For example, if your trade receivable days, you want to keep your trade receivable days as short as possible. Why? Because the shorter your trade receivable days, is the quicker you get paid. Okay, you want to keep your inventory days as short as possible. Why? Because the shorter your inventory days, it's the quicker your inventory is turning over, meaning that it's the quicker that you're selling that product. And your trade payable days should be the day that is the longest. Of course, you must not keep your trade payables days too long to annoy your supplier, because your supplier might stop the business with you, might withhold offering you any more credit. So working capital days is a very key component in managing your business well. Okay, let's switch over to cash management. When we speak about cash management, we ask ourselves, how liquid is the business? How much cash do we have on hand to take care and to meet our immediate debt? And our immediate debt, we speak here about our short-term debt. We might have a supplier we need to pay. Do we have enough cash on hand to pay that supplier? a very, the industries vary in terms of ratios, but a safe ratio to have, a liquidity ratio, is to have 1-to-1 ratio, meaning that you have equal amount of current assets to cover your current liabilities. That should be the bottom line. Of course, a better position would be a 2-to-1 ratio, where you have twice as much current assets to cover your immediate debt. But you always want to ensure that you have sufficient cash on hand to cover those things. And when we speak about cash on hand, we're talking about cash equivalents, which can also be with our inventory and our trade receivables. So managing our receivables is important. It's good that we offer persons on credit, because if you offer on credit, more customers are likely to buy from you. But managing your credit customers is very, very important. Following up with telephone calls, with sending them emails, reminding them of outstanding invoices is very important in terms of your cash management. Okay, cash flow forecast enables you to predict your projects or to determine your financial viability. It is wise that you, as your business continue to always do cash flow projections, at least 12 months, that shows you how your cash is doing. Because although profit is what you're in business to make, cash is very, very important for the day-to-day survival of your business. So you might be profitable. You know, your records might be showing that you have, you know, a large volume of profits on your books. But if there's no cash to finance your immediate debt or to finance your day-to-day operations, then your business, although it might be highly profitable, it can also run into bankruptcy. So cash, as they say, is king. Cash is very important. So using a cash flow statement and forecasting your cash flows helps you to predict in the future whether you're going to run into cash flow problems or not, so that you can adjust. Also, funding strategies would help you to determine the right match, as we spoke about before, in terms of short-term to long-term debt. What mix is there going to be a combination? If I want to have a funding strategy, I'm going to take most of it in short-term debt or part of it. It all depends to the nature of the investment, as we said. But all of these are very good tools that you use within your financial management. Okay, I know we are out of time. Is there any comments on this slide, Lizra?
No, we haven't received any comments on this one, so we'll be able to move on. Okay, great.
All right, so we are coming to close, and this is our final area, and this one, it should be brief. We're speaking here about how we approach our accounting, whether we're going to have somebody in-house or we're going to have outsource. And there is no right or wrong. There are pros and cons to each approach. And so we'd just like to share with you as your business. The pros for, and we'll look at in-house accounting first, the pros for in-house accounting, it adds value to the firm as your employee grow. For example, you might start up somebody just being, you know, an accounting clerk, probably just doing basic bookkeeping, and that person develop themselves and you know, do some personal development where they now gravitate and graduate into a full-blown accountant. That adds value to your company because the person has the grassroots of how your business operates. They have grown. They are aware of, you know, all the ins and outs of the business, and so they are able to generate reports, have these ideas that can help manage it. So that's a good advantage, I would say, if you have someone who is in-house has grown there, as it adds value. Also, that person can also serve in other roles. And so multitasking, especially if your business is small, you're starting small. If somebody has some accounting background, it helps. I would say throw caution to the wind as well, because you want to think as your business expands, you want to also think about internal control processes. You want to have segregation of duty where you don't have your accountant being also the sales clerk, being taking care of everything from the time the cash comes in to the time the cash goes out, because that's where persons can get creative and manipulate the system. But on a small scale, that person can serve in various areas in terms of multitasking for the business, and it helps the business grow as it's moving on. And you also have an immediate access to your content because your content is right in the same physical space as you, or you are directly in contact with that. You could get feedback from that. If there are any questions or you need a report done quickly, that in-house content is there with you and can understand and generate that report, or be pulled quickly into a meeting as opposed to if that person is being outsourced. Some of the cons of in-house accounting, it's costly. You have to cover the full salary of that person. There are all the employee benefits that you'll also have to cover, as we spoke about, Social Security, probably uniforms or whatever the other benefits might be, whether it be insurance and whatnot. So it can be costly for a small business to have an in-house accountant. There can also be a higher risk of errors and fraud. Although we spoke about it in terms of the advantage of multitasking, but as I said, the caution to the wind is that persons can get creative, especially you as a business owner. If you are not so versed with accounting and you have somebody who has grown in accounting and you just close your eyes and trust that person, if that person is not a professional, has a high ethical standard, then that person can easily commit fraud, or there can also be high risk of errors because that person is a novice, learning the system as they're growing into it, and there can be a lot of errors. So consider that when you're thinking whether you want an in-house accountant versus outsourcing. Okay, let's now look at outsourcing accounting services. So the benefits of outsourcing the accounting service is that you have a cost flexibility in that you only pay for what you want. Okay, if it is that you want a financial statement, then the accountant is going to charge you just for this. You don't have to pay that external accountant for anything else apart from the service they're providing. You're not responsible for covering your Social Security, you're not responsible for their salary, just for the cost of the service that they're providing. So there it provides more cost flexibility for you. Also, you're getting more of an expert on a higher level of service, a higher level of experience, because that accountant has experience in the field, is trained in the field, qualified in the field, to deal with those things, as opposed to probably someone who is growing into your organization. There's also more accurate and reliable financial statements because that accountant is already qualified, is doing things in adherence to general accounting standards and practices. And so your financial statements are going to be, I would not say error-free, but it's definitely going to be of a higher standard than that if you have someone who is in novice just letting the system through your company. The cons of having an external accountant is that you have less control of the accounting, but in that it's not easy to just get the person into a room and tell them what that you want. Once you have contracted with an accountant as to I need financial statements, that is what the accountant is specifically focused on providing to you. And at that point, you can't change the service agreement as to wanting something different. So you have less control as opposed to someone who's working with you that you can get to change. And of course, limited access to that accountant. As you know, the person would not be in physical space with you. And they would also have other clients that they have to deal with. So in considering what sort of accounting personnel that you want in your business, you would have to weigh those pros and cons and see what works well for you. Is it that you can afford to have an in-house? Is it that you can afford to outsource? Look at what it is. If you want to have accurate and experienced accounting records, then you might have to think of outsourcing. So it all depends on what works well for you. If you yourself have a basic accounting skills, you can do a lot of the accounting yourself as a business owner. And once you're ready to get it vetted, you could get an accountant to review your books, which would reduce your costs considerably, as they would only be spending time on reviewing the books and not putting everything together for you. Let's see. Okay, I think there's one more. Well, that's a feedback session, but right now we have come to an end of our training. I'm hoping that it has been of good value for you. I was expecting a lot more interaction and feedback. Nevertheless, I'm hoping that this was of value to you and value for your business. At this time, I'm going to hand over to Lizra.
Okay, good. Thank you so much, Elijah, for this really insightful presentation. We got to understand quite a bit about financial management, about inland revenue, social security, in-house versus outsourcing, the accounting, and I think that these points and the information shared is extremely valuable in improving how we manage our business. And if we manage our businesses well, we will have greater success. So thank you so much, Elijah, for sharing these. We'd want to share with everyone, want to get your feedback on this on the presentation that took place today. Two things. We'll be sharing the link in the chat very soon. And we also want to invite you to take the assessment quiz where you'll be able to demonstrate your understanding of the points that we presented. So we will share this presentation with you where you'll be able to guide you in successfully completing the quiz. I'm going to stop share my screen so that I'll be able to put the link here for the feedback, and we will walk you through this feedback so that we'll be able to get your responses as soon as possible. So I'll stop share the screen right now. Are there any other questions that you would like us to touch on? Anything that you would like Elijah to support in helping you to understand before you respond to the questions? We're getting some feedback here on the chat. Several persons are indicating the usefulness of this training to them. So thank you so much for your feedback. Very useful, excellent presentation, terrific presentation, great and valuable information. Thanks, Elijah, DAIC and CREAD. So Elijah, we're already getting some feedback from our participants. So we are sharing the feedback form with you here right now. We would ask you to please click on it, and I'll walk you through the questions so that you'll be able to respond to the survey right now. There's a question, Elijah, asking if there's any particular accounting software that works well that you would recommend to the attendees on today's call. Oh, yes, you could go ahead. You could unmute.
All right, I was trying to unmute and it was saying I couldn't. Yeah, that's a good question. I would say we have a training coming up that we're going to speak about that. It's on level 3, and probably wouldn't want that person holding their breath until then. But I would say to find an accounting system that works well for you would depend on your business needs. It would depend on things such as the cost. It would depend such as the flexibility that business offers, that platform offers to you. Think of a business where you use a software that it would grow as your business grew and not restrict you. There are some, like one of the common accounting platform is Quickbooks, and they have a wide variety of packages that they offer to persons at different price points. And I would recommend that Quickbooks, take a look at Quickbooks. There are a lot of accounting, most of it is online. And what it does, it also helps you as a small business to grow as your business grow. It also allows remote access where you and your accountant can simultaneously go through your records together. And you can there are a lot of things you can do with it in terms of on the fly. You can create certain invoices, send out an email to a customer, and those sort of things. So QuickBooks is worth looking at. There are a lot more accounting softwares that you can look at, but I would recommend taking a look at QuickBooks. There are also free accounting platforms. Wave is an accounting platform that is free as well. It is not as robust as QuickBooks. It is more basic. I would say Wave, I would recommend Wave for someone who's just starting up and probably later on wants to upgrade to QuickBooks. But as I said, it depends on the needs of your business. So I would rather, if someone would like to reach out to me on a one-on-one, then I could probably get a better feel of what your business needs are, and then I could probably point you in the right direction.
Thank you so much for this, Elijah. And Mr. Robertson just mentioned too that he agrees with the use of QuickBooks as he believes it's best, and you're able to see your data on the app. So thank you for also confirming that. Great. I hope everyone would have had gotten the links so that you could answer the questions. It's a satisfaction survey, and we really do want to thank you for attending this virtual financial management training, and we hope that it was of extreme value to you. But we do want to hear your feedback so that we can continue to improve the logistics and content of this. So please let us know your thoughts. There are very few questions where we ask about your satisfaction of five different areas: the course content, delivery of the content, relevance, delivery of the material, ability to practically apply the course to your daily operations. And then we want to understand what were your key takeaways from this, your overall feedback of the training, and your name is optional. So we really would like you to respond to this survey, as it will help us to continue to deliver excellent content and service to you who are on this call and others who would subsequently look at this training. So are there any other questions? Thank you, Josiah. Great information, well put together. And Wendy, thank you, Elijah. So thank you everyone for attending this course, and we look forward to your feedback. We also look forward to you responding to the questions, taking the quiz, so that you would be able to receive your certification to move to level 2. The date for level 2 will be announced shortly, so in consultation with CREAD, we'll be able to share this information with you as soon as possible. Thank you everyone again for being on this call. CREAD, thank you for your partnership, and we look forward to our businesses being more successful and having better financial management. Have a great day, everyone. I will unmute everyone, so if you want to say goodbye. Okay, so everyone, I think would be goodbye to everyone. Have a great day.
You put a half bottle of malt back into it.